Hey folks, Dan Frio here with your market update for September 23rd, 2024. So you might hear some noise above me. I'm still at the condo. I'll be leaving today, but they're doing some work upstairs. So my apologies on that. So let's get to it. Mortgage rates eased a little bit more on Friday. Is that going to continue this week? Well, there's not a lot of economic news this week. And I do want to show you a new feature that I'm going to be providing you guys. A lot of people are saying, I got no money. I have no this. My whole goal is, for real estate, but I want to help you guys accumulate some wealth. Okay, so we're going to put in a new caption right through here. I'm going to start a portfolio here for you guys to track, and let's see how we're doing with these stock recommendations I have. So if you're interested in checking these out, hold on a little bit later in this video. I'll explain to you what I'm planning on doing to help you guys navigate maybe the equity markets also. So without further ado, let's get over to it. The top 6 programs for mortgages are right through here. Okay, so what people get these rates? Well, there's 5 pieces of criteria that gives these people these rates. 3 of them are this. They're first-time homebuyers buying a single-family home that they're going to live in. Okay, so that's pretty simple. So these people also have this. They're putting down 25%. So unless you're putting down 25% and have a 780 credit score, these probably aren't your rates. So if you want to find out what your rates are, reach out to me at the end of this video. I'll show you how to do that. So without further ado, let's get to the economic calendar. All we have this week of substance, or today and tomorrow, are Fed members speaking. And that always scares the bejesus out of me because I don't know how the markets are going to take it. So today we have Bostic speaking, Kashkarian speaking. Tomorrow, who do we have? Bowman speaking, and so forth. So that's what we have on the agenda in the next 2 days. So let's see how that's going to come out. Right through here, it's going to depend on who's speaking also. What you have to pay attention to is the person on the Fed, are they a dove or a hawk? Okay, a dove always wants to cut, and a hawk always wants to increase rates. So you have to really know what kind of person is speaking when they're speaking to the Fed. So that's that piece of the puzzle. Let's get over to here. Now, here's one take that a lot of people didn't see. Okay, I do research in the background on weekends. It drives my family crazy. But here's a Fed official sitting here saying the PCE, the number one Fed number that they watch for inflation, is actually below 2%. So let's get over to this video so I can explain it to you, and maybe we can get more of this news out there so the markets can understand that the Federal Reserve, I think, has battled the inflation front. Now it's the employment number. So let's get to the video. You can take that, and then when we come back, I'm going to show you how the markets are reacting to this, especially the CME FedWatch tool. Then we're going to get to those stock predictions that we're looking at. So hold on 1 second. Let's get to this interview.
I am very pleased, Leslie and Carl, to bring you a special guest. We have with us from Washington, D.C., Chris Waller, the Federal Reserve Governor. Chris, thanks for joining us this morning.
Hey, Steve, thanks for having me on.
All right, well, great. I think I'm just going to start where everybody, I think, wants to know, which is, how did you get from a market pricing in 25 to eventually doing 50 basis points? And you obviously voted for this, so I'm guessing you supported it. Explain why you thought 50 was the right number this time.
Yeah, Steve, I think 50 really was the right number. As Chair Powell said in his press conference, we're at a point where the economy is strong, inflation is coming down, and we want to keep it that way. So we felt that 50 was the right policy action to do that. Now, on my own thinking, if you recall back in January, I gave a speech where I argued that if inflation continued to moderate at the pace it had been going, we could begin cutting rates and bring the rate down a fair bit, just because inflation was falling and the economy was doing fine and there was no recession in sight. Now, we had a bit of a bump in the first quarter that pushed that back, but that's exactly the situation we're sitting in now. The economy's strong, inflation is coming down, and therefore it's time to cut. Now, in terms of 25 versus 50, when I gave a speech 2 weeks ago today, the data we had after the July jobs report signaled to me that cutting, say, 25 would have been a good idea. But I was open to the idea that we could front load if further data came in suggesting it. Well, the inflation data that we got during blackout pushed me in that direction for the following reasons. Everybody was focused on core CPI, but what they weren't doing was looking at how that CPI report and the next day's PPI report were going to feed into total and core PCE inflation. And once you did that, there's an estimate that August PCE monthly inflation will be somewhere around say 0.14, very low. If you take that estimate and you add it to the last 3 months of data on core PCE, that 4-month number annualizes to less than 1.8%. So over the last 4 months, if this estimate comes in correct, core PCE is running below our target. And that's with very high housing services inflation. We did a simple calculation, my team and I, that if housing inflation grew at 2% annualized, and you plug that into the monthly numbers, core PCE would be running under 1% for the last 4 months. So that is what put...
There it is. So the PCE is the number, the inflation number that the Federal Reserve puts the most emphasis on, not the CPI, not the P. And if we're saying, numbers you don't understand or anything, look them up or continue to watch my videos. You'll notice on there, you'll learn a lot about this. So let's keep going on with the video.
Me back a bit to say, wow, inflation is softening much faster than I thought it was going to. And that is what put me over the edge to say, look, I think 50 is the right thing to do.
It makes sense. I guess I did what you said I shouldn't do, which is I looked at that CPI number. I also looked at the market probabilities of an 85% probability of a 25, and I thought that the case is done, but I guess it was the PPI the next day and then the calculation beyond that. Chris, what's the right pace here, and how do we figure out what the right pace is? The market, I'm going to give you a fresh quote here, looks like it thinks you're going 50 again. Is that the right call?
Well, so first of all, I can think of several scenarios that determine the pace.
Chris, 25 for this time and 50 again in December is the probability now.
Right. So as Chair Powell said, he said this is really going to depend on the data. I can think of several scenarios that will determine the pace. So, for example, if the data comes in fine, nothing bad one way or the other, you could imagine going 25 at the next meeting or two. If the labor market data worsens or the inflation data continues to come in softer than everybody was expecting, then you could see going at a faster pace of possibly 50. And if the inflation data suddenly reverses, which, we've seen this before, it's not something new, you could even argue for maybe we should pause it. So there are scenarios in which you could do a number of things over the next couple of meetings. And that's why, as the Chair Powell said, we're really data dependent at this point.
But
and just the last point, I wish... Go ahead, Steve.
Sorry. No, you go ahead.
No, I was just going to say, the other thing I would just advise people is get off the calendar day. It's really a matter of what we do over the meetings, which includes January and March, but we don't put in a number for kind of January, March. So focusing on the calendar day, I think it's just a little bit misguided in terms of looking out. What you really want to think of is 6 to 12 months out, not just...
Perfect. So that's what we got on that part. So I missed it. Steve Leisman even missed it. We weren't focusing on the core PCE, and I think they're there now. So that's what we're seeing there. Fantastic news. Okay, so let's get over to this, where the federal funds rate is right now. The federal funds rate right now is between 4.75 and 5. So let's see what the CME FedWatch tool's telling us for the next meeting. Right through here, the November meeting, they're expected to be at 4.5 to 4.75. Right through there. I'll take that. Here's what I don't take. I don't think the data is going to come in weak enough that at the December meeting, they're going to cut another 0.5%. So these are the areas that I kind of am at odds a little bit, but I missed this one. So there's a 0.25% cut expected at the next meeting. So that's what we're seeing so far in this piece. So now we focus in on the inflation rates and things like that. Let's get over to the stock market, the equity markets. They're doing okay today. We got the Dow Jones up 50 points. We got the S&P up 20, NASDAQ down 72, Russell 2000 barely budging. The nice thing about the VIX, what this tells us is the anxiety, basically the anxiety on Wall Street. So the more anxious it is, the more volatile it is. So we like when this comes down. Let's look at cryptocurrency, see what this is doing for the day, 63.4. That's not bad. And oil is coming at 71, up just a little bit. That's okay for inflation at the 71 tier. So we're okay with that. So the next thing we're going to talk about is, here's a new analysis I'm going to do. I'm going to start recommending or telling you things I'm buying or watching in my equity position. And about 2-3 weeks ago, I started this. So I actually plugged these in. And here's some of the things I've been talking about so you can see this. We'll track it. So, for example, the SPY up there, that's the S&P 500. If you buy that, You're buying basically all the stocks in the S&P 500. That's the easiest way to look at it. For example, I just added to this position XLF. It's a basket of financial stocks. Let's just break it down real quick to show you guys how this works. So if you like the financials, you have interest rates coming down, the spreads, margins are supposed to start to increase a little bit. A lot of economists or analysts are expecting the financials to do pretty good. So if you're like, okay, I like the bank stocks, which one do I pick? Well, you don't have to pick one. You can pick a whole basket of them. Go through here. And what this does is you'll go through, here's the holdings. So the ticker symbol for this is XLF. Okay, so just look it up. You can go to Yahoo Finance, anything of, any website to do that. And go to the holdings. This is going to tell you if you buy one share of this thing, this ETF, here's all the stuff you're getting. You're getting positions in Berkshire Hathaway, JP Morgan, Visa, MasterCard, Bank of America, Wells Fargo, Goldman Sachs. So you're getting a piece of all these by buying just one share of this XLF. It's called an ETF. So basically what it does is it's like a mutual fund. Where I don't like about mutual funds, each one of these hold a basket of stocks. Okay, so think of it as, I like Berkshire Hathaway, I like Citibank, I like Bank of America, I like this. Which one do you pick? Well, just buy this. You're buying them all. Okay, so that's how it works. All right. The difference between this and a mutual fund is a mutual fund's usually a little more expensive. It's managed, but you can't trade it throughout the day. It balances at the end of each day. It settles, and then you can trade it. With an ETF, you can trade it just like a stock instantaneously. If you see it going down and it's starting to plummet, you're like, I want out of this. You can sell it immediately. With a mutual fund, you have to wait till the end of the day, let everything settle, and then go in and place a sell order. So that's why I like ETFs a little bit better than mutual funds. So this is just one of the holdings. Check that out if you want to do some research on that front. I think you're going to be a little bit pleased, and you're going to learn a lot this year from me in the next 12 months in regards to stocks, bonds, ETFs, mutual funds. The whole list of gamuts goes on. If there's anything specific you want me to talk about, list it down below in the descriptions. I would love to bring that data to you. My goal on this channel, I'm a mortgage loan officer. That's what I do for a living. So if you're out there trying to buy that first house, maybe refinance, buy that first investment property, I'd love to help. But it doesn't stop there. I want you to continue to watch my videos so I can educate you guys on where, our high schools and colleges, these are areas they don't even teach you. So we're going to start talking about PE ratios and a whole bunch of other things. We're not going to lose our focus on real estate, but I want to start helping you guys understand the overall markets. So that's my report for today, guys. I'll be traveling the rest of the day. I will be back to normal hours tomorrow. So I'll be posting opening bell tomorrow morning, closing bell, and then we'll be back to our live events also on Thursdays. We have some special guests, some really special events guests for you this coming month. So please check out the calendar for that as well. So thanks so much for watching. My name is Dan Frio. Like I said, I'm a mortgage loan officer at ServBank. If you want to try to find more, or if you want to find out more about me and my team, just go to therateupdate.com. Here's our website. If you're looking to buy that first house, what I want you to do is just stop everything right now. Click the grant finder right through there. A lot of people are missing this tab, and you're missing out on grants to help you maybe with that first down payment. Maybe even look to help you with closing costs, whatever it is. Check out these. These are handpicked because they're basically almost free money in your pocket. But if you want to get the ball rolling, you can hit the apply now button, or you can scroll down to the bottom of our website, find our email address down there, as well as our phone number. It's 844-775-5626, or you can email me directly. Yep, it's me at dan@therateupdate.com. Guys, if I haven't responded back to you in the last day, 24, 40 hours, please be patient with me. I went away for a few days just to get away, me and my wife, but I'll be back at the office first thing tomorrow morning, and I'll be at your beck and call at that point. So thanks so much for watching, guys. God bless. Have a fantastic day, and I'll see you back here tomorrow morning. Take care. Bye-bye.